Oh, hey. Well, I'm just sitting here thinking about my day. I'm down 13,000. I guess it's not the end of the world, but boy, feels like a frustrating morning. More than the dollar loss, what's frustrating is being wrong on, more trades than I was right. That's what's frustrating. It wouldn't be any different from trying to, going to a batting cage and swinging the bat 10 times in a row and only hitting the ball 3 times. You'd be like, man, this is frustrating. What is going on? It's not, the money is kind of a side factor because I'm not as fixated on daily gains are great. It's more that today I had some good profit at the beginning of the morning, and then I gave it all back and went red. So I actually went from up 10,000 to down 13,000. That's a $23,000 swing in the P&L. So I lost $23,000 over the course of, stair-stepping down, 2 red trades, 1 green one more big red one, 2 green ones, 1 red one, just generally those stair-stepping down. And I feel like I could have walked away a little sooner, but at the same time yesterday I was down 5,000 and I said, I'm going to stick it out. There might be some more opportunities. And I finished the day up 8,000. Last Monday, I started the day down 7,000, worked my way back up to almost break even, and then dropped back to down 10,000. And 10,000 is kind of the number where I'm saying if I'm down more than 10, even though I could afford to lose more, no reason to throw money in, a pile and light it on fire. If the market's not hot, if my strategy just doesn't seem to be working today for whatever reason, ease off the throttle. And I was down 9 and then dug my way out to down maybe, 5 or 4, and then back down to down 9 and then to down 13. I was like, all right, you know what? That's it. I'm throwing in the towel. So someone just asked me, because we're going to start summer school in just a second, and they said, Russ, have you ever had a day like this where you said, I'm throwing in the towel, I'm walking away, and then, you came back? Because one of the stocks that I stopped out on has ended up squeezing higher. And I said, yes, I have done that before, and I don't think it's never been the right decision to do that. When you've had the point where you're like, okay, I've got to walk away, and you walk away, and then you come back and convince yourself to take another trade, you are without a doubt breaking rules. Even if that setup looks good, you've already hit your max loss. Whether it's because of, emotional frustration, you've just been like, wow, I'm seeing red, I'm so frustrated, I've got to stop. Or it's because you hit your dollar max loss, or you had too many red trades in a row. Whatever the trigger is, there was a reason you walked away. And today, the leading gapper, which was gapping up over 150%, ended up failing. It just, with no real strong indication that was going to happen. Really great pre-market chart. Not the strongest catalyst, but catalysts sometimes are strong, sometimes they're weak, and that's not really always a deciding factor. When you have high relative volume and the stock is moving, that's what we look at. And so it's up 150, 180%. The bell rings and it just starts selling off. I tried to do dip trades. On my first dip trades, I gave back my pre-market profit, and on my next dip trades, I went red. Every dip just kept going lower. So, so whatever. It is what it is, but I think this recap will be good for some of you guys. A lot of the times the feedback I get is that the red day recaps are better than the green day recaps. So being able to kind of hear my thought process about when is the time to stop, where did things go wrong, that can be probably more valuable, because ultimately being a successful trader, it's not just about, having green trades. It's about being able to know when to walk away and being able to manage those losses. And although being down 15,000 today or 13,000 isn't great, yesterday I was up 8,000, Friday I was up 20, the day before that I think I was up 5, the day before that I was up 60. So relatively speaking, I made $100,000 last week. So being down 13 right now is a 13% pullback after last week's high. It's not a big deal. But it is important to be mindful that this is a place to stop. And what type of price action would I need to see tomorrow in order to either be willing to, get back on the horse and get back in the saddle and try to take some more trades, or maybe to say, I'm taking the whole day off, right? So we'll talk about that more pre-market tomorrow as I'm actually going through the watch list. It'll be very much based on the action that we see tomorrow. I can't decide now. It'll be based on what we see in the morning. But as always, questions, comments, you guys can leave them down below. And there will be a link down below for our 4th of July sales. So 4th of July sales have started today. Coupon code July40 is now active. That will save 40% on the Warrior Starter and the Warrior Pro course. So those of you guys who want to learn from someone who shows you both the red days and the green days, you found the right spot. This is the place to be. I recap every day, red or green. It happens that there have been more green days, which is good, but I recap the red days too. So today is the red day recap. I hope you guys enjoy it, and I'll see you back here first thing tomorrow morning, live streaming right around 9 a.m. All right, see you guys in the morning. I'm going to go back and keep thinking about my day. All right, everyone, so we're going to do our recap here and go over today's trades. So today is a red day recap. And sort of like yesterday and sort of like a week ago on Monday, it's, these are my last 3 days that have been difficult. A week ago Monday, I finished the day down 10,000. So it was a red day recap. Yesterday, I was down about, I think it was 5,000, 4,000. And I started in the green, went red, and then worked my way back to green and finished up 8,000, which wasn't bad. Today, I actually started green on CARV, and then I gave back all of the profit on it, went red by 2,000, and then I took a trade on WKHS, and in one trade lost 7,000, very much like yesterday on SHLL. Put me down about 8,000 or so on the day. I started digging my way out of the hole. I had a win on Apex, a win on BLNK. I had a win on VXRT, and then I gave back the profit and went red. And then my last trade on POLA put me down below 10 grand. At that point, I said, that's it. That's the point where I'm walking away. I'm not going to keep trading down more than 10,000. That's just where I'm setting the line right now. And again, this is relative to the green days that I've had in the last few weeks. A $13,000 red day is actually not bad at all. In fact, with the 25, 30,000 share positions sizes that I've taken, if I had a $25,000 red day, or a $30,000 red day, even though that would be the biggest red day I'd ever had if I go over 30, it wouldn't really be outrageous compared to the amount of profit and the size of some of the green days as I've had. But of course, no one wants to have a really huge red day. So this is where I'm drawing the line. So let's kind of break down today where things went wrong. So this morning, I sat down, reviewed the gap scanner, the same as any other day, and CARV was our leading gapper. Now, CARV was already up over 100% with 1 million shares of volume. A headline here about Netflix shifting $1 million into black-owned banks, and banks that serve black communities. That wasn't specific to CARV. Although CARV fits that criteria, it wasn't that they're getting $100 million. It was more of a general headline. So pre-market, we had this move up, and I actually took a trade pre-market on it for the first 5-minute candle to make a new high right here. So I got in it right there, and this squeezed from $14.84 up to $17. Really nice green trade right out of the gate, or pre-market. It then pulls back, and I was looking to take a dip off of VWAP, which I did take right here at about 1574, but it popped up and then dropped back down. And so I ended up into the open holding a position that was red, and I had not yet given back all of the profit from this move here, but it wasn't looking really, really good. But at the same time, I was thinking, I'm going to buy the dip off VWAP because I looked at this and I thought, this thing looks good for a break over 17. It's now a double top, so third attempt, break through 17. So that was the setup that I was looking at. And as you can see, right out of the gates,
it flushed. And so I tried to do a dip right out of the gates and add to the position at about the VWAP of 1450, and it flushed down to 14. So I stopped out there and gave back most of my profit, not all of it. I was still green. And then it drops down to 1303. It does a false halt. I got long. It bounces up to 1340. Then it drops down to a low of 1278 and actually gets halted going down. And I was holding into the halt going down. So at that point, on resumption, I added to the position. It did pop back up to 1340, and then I was holding right through this consolidation. I was holding 10,000 shares, and on this drop right here, I stopped out, and with that, I was down 2,600, and I was like, all right, well, that's it. You know, what can I do? I had the wrong idea. It was very strong pre-market. There wasn't, to me, an indication that it was going to fail like this out of the gates. So I was still in the mindset of buying dips. Definitely doing dip trades below the VWAP is at a certain point just doing reversals. And reversals are fine, but it just kept not really reversing. I mean, this popped up here and then just went lower. It popped up here for a second and then lower. It started to pop up here, then came back down. Then it curled up here and then came right back down. So, you know, you could have probably, if I'd been trading with smaller size, I probably could have gotten in, gotten out a little faster. I probably maybe could have done better. It was bigger share size and trying to go for bigger moves that got me into a little bit of trouble. So I'm a little disappointed because I was up after this trade here and this one here, I was up over 10,000 on the stock and I gave it all back. So before I went red on the day, when I was still up, I don't know, 4,000 or 3,000, I took the trade on WKHS. So WKHS was, you know, and this is, again, it's a little outside my go-to strategy, being that it's a little bit more expensive, but it did have high relative volume. And so with that high relative volume, I looked at it as it ripped up right here to 18, and it did a micro pullback, and I got long right here. It taps 18, it can't break that level, and let's see, I actually stopped out down here on the low of this candle at 1710. 8,000 shares, boom, $6,000 in the red. It's like 80 cents a share. And so with that, I, you know, plunged into the red and I never got back to green. So I would say today, you know, it's tricky because in the last few weeks, a good pre-market trade and a cushion of $10,000 has been something that I've been able to kind of use as leverage a little bit, because I'm like, all right, I'm up 10,000, so I can take this next trade with 10,000 shares and kind of let it ride. And I did that on CARV and then gave back my profit. And then perhaps because CARV was so weak, other stocks at the open were also choppy, because this is sort of the thing. CARV was the leading gapper in the entire market. So when the leading gapper fails, it's not a good indication for momentum in general. Now, if that leading gapper comes and does a break of VWAP and rips higher, fine. But it didn't do that. And so while the leading gapper was failing, I was shifting gears and trying to jump in other things, and we just generally didn't see clean momentum. And so, you know, this right here, I underestimated the fact that this could drop $1 a share. I stopped out almost literally at the low, which is embarrassing, and then it rips right back to 18, and I was like, oh my God. But the fact is, at 1710, I was down 80 cents a share. I couldn't keep holding on 8,000 shares. I had to cut that loss. And I didn't want to add to it because this price range, it can drop $2 a share, and just like that, you know, you can really get smoked. So while 6,000 is bad, it's certainly not as bad as it could be if I didn't follow the rules. So I cut the loss on that, was frustrated to see it pop back up to 18 there and then come back up a second time to 1874. So that was WKHS. So first trade of the day was on CARV. And again, being down 2,600 isn't the end of the world, but I was up 10,000. So I gave back over 10,000 of profit. trying to do dip trades on it. And I should have just, I don't know. I mean, it could have done a break of VWAP. It could have worked, but today was the wrong day. So that's frustrating. So that was the first couple trades. So I went to up over 10 and then started giving back, gave back half the profit on CARV, then dropped red on WKHS, and then was down almost 9,000 or whatever it was after that final trade on CARV into that drop, wherever that was. And then I was like, okay, yesterday I was down 5. And I said to myself, the best chance of getting back to green is not to try to hit one $5,000 winner, but to try to hit, 5 or 10 $500 type of base hits. And that's what I did, and I actually got myself back to green. So today I sort of was like, okay, well, $10,000 is kind of the spot I've got in the sand. If I go below 10, I think I really need to walk away. Not that I couldn't right now, potentially, if something opens up, get myself, $3,000, $4,000, $5,000 winner, but it's just starting to become that I'm really fighting an uphill battle, and it's not worth it. So on the next trade, after a couple of these losses, we had VXRT. So VXRT, I was a little hesitant about at first, but it popped up here to 8. It did a micro pullback, and I actually bought it right here. And on this one, I'm a little frustrated because I bought 10,000 shares, and then I added and got myself to a 20,000 share position. It squeezed up to 847. All right, so obviously a nice move there, and I made about $4,000 on it. All right, so then it pulls back, and this is actually even kind of hard to see on. So let's see, where was this trade? So I'm trying to see where this was. So it pulled back. It hit a high of, 47. It then pulled back for a second. I did a dip trade, and I bought 20,000 shares on the dip at, I think, 26. And then I stopped out right down here as it broke down and went from, up 4,000 back to break even. So again, I was like, man, this is frustrating. I started to get a cushion. I was like, okay, we've got a cushion. Let's work with this. One step forward, one step back. And then my next trade on it was right here, first 5-minute candle to make a new high, which was this setup. And this is kind of frustrating because you look at it and you say, well, why'd you stop out? It hit 22, and then it dropped down on this candle back under 8. And I was in at 20 or whatever, or I was in at 810, and I stopped out at 8. So on that one, again, I took 20,000 shares, lost $2,000, and down 1,500. So, or whatever it is on the stock, 1,500. And now it's coming back up. So I just felt, I started at that point, I was like, man, this is really frustrating because where I'm thinking these are going to break out, they're doing false breakouts and then they're going. But others are doing false breakouts and they're failing. This right here, typically I would look at this and I would be thinking this is a long over the highs. But, the way things have been trading today, I don't know. And this rejection here from 69 flushing down to 806, I mean, that was a really nasty drop. So this is kind of, we had the nasty drop there, and then we had another one right here. So that all is a little bit frustrating. And then I had BLNK, which was a similar one, actually, in that I bought this, let's see, for the break of 6 right here. And I wasn't as aggressive on it, but I got in this. We had the high of 608. I got in at 608. 15,000 shares. Squeezes up to 647. I'm taking profit into the squeeze. I'm holding a core position. I add right here 15,000 shares at 630. It pops up to 640. I add at 645. I'm looking for the break over 650. Squeeze up to 670. And then whoosh, down to 610. And I stopped out of that. And so, the profit I made on the first move up, I gave back, coming back down. And then the last trade that put me over the $10,000 mark was POLA. So on this one, I had already taken a trade on it, a couple right here. I took this trade and lost 700 on it, stopped out right there. I then took this trade right here and sold right here for a small profit. And then I got back in for the second break over 3 and stopped out right down here for a $4,200 loss, almost 30 cents on 15,000 shares. So I feel like today, every day when you come into the market, obviously, the goal is to be profitable. And so today I failed at that goal. But being really short-term focused on an individual day is not always a good thing, because you don't want to lose sight of the big picture. If you've had a green month or you've had a green week or whatever the case is, then being green on one day, the more important thing is just to ease off the throttle as quickly as possible. But it's kind of like a puzzle, trading. And the reward of solving the puzzle and accurately predicting the patterns and how they'll resolve is monetary. You solve the pattern the right way and you succeed. And you're wrong at the way you try to solve the pattern and you lose money. So the stakes are high. And today I kind of had the approach that I think I sort of got into this mindset of starting to get frustrated. And I was feeling frustrated that not as much about the loss, but about just continuing to be wrong in what my expectation was. And just being really surprised. Like, my expectation of a break through the whole dollar was a clean move. And that is not what happened. This is getting, this is getting to a point where I'm getting frustrated. And so that is obviously a good reminder to walk away. If you're starting to get frustrated, then you're going to often start trading with bigger size, start revenge trading a little bit, start getting a little bit more aggressive, and that can all start to snowball and become a bad situation if it's left to emotional influence. So that's why it's important to have a line in the sand somewhere where you say, okay, at this point I'm walking away. As I look at VXRT, I was here once again. I had the wrong, given the fact that it's failed on some of these other moves. I thought, no way is it going to break, and went from 69 there up to 89, extra 20 cents. And then in one candle back to 63. So, again, I don't think this is related to, someone asked today, is this what summer trading is like? It's kind of hard to say, because some years summers have been slow and some years summers have been great. This is one day out of a period of 6 weeks that has been really hot. So this is one day that has been choppy. When you have a period of time where the markets are choppy, you have to adjust your strategy. And that isn't something that I did today. Today, for the most part, I kept trading my strategy and I kept waiting for something to show momentum. And the adjustment to the strategy would be scaling back down on share size and doing small little base hit trades just to kind of grind on small numbers, rather than trying to take big positions. Because when you take a 25,000 share position, you can't lock up profit at 5 cents. 5 cents a share with slippage, that's not even profit usually. So you need stocks that are squeezing up 25, 35, 45, 50 cents, $1 a share. And we had that initially on CARV, which is why my sort of bias this morning was, okay, we're seeing some strength in the market. And even when CARV was dipping, we've had some really good dip opportunities, and I thought, this is fine. It's dipping to the VWAP. It's going a little lower. It's still got the volatility. It'll pop back up, and it kept just failing. So at that point, probably the smart thing to do would have been to say, okay, leading gapper's failing. I should ease off right now, or maybe even stop right now. And I had that thought for a second. I was like, should I just stop trading here? And I was like, it's 9:32. I'm not going to stop trading at 9:32. That's silly. If I had, though, I'd not be down 13,000. So, in hindsight, maybe I should have, but I think the trade on WKHS was probably the worst trade of the day, because on this one, it was a very, very micro pullback, and I just sort of jumped right into it and then added. And, I think this price range sometimes is maybe a little deceptive, because we've had some really strong ones in this price range, but we've also, historically had more of this type of action of like false breakout, a breakout, and then it gives it back. So like this type of action right here is why I usually avoid this price range, because if you're getting in for the break of 18, you had 1, 2, 3, 4, 5 false breakouts before finally having a breakout that popped up and then immediately on the next candle was down 25 cents below the breakout point. And that feels like, wow, I'm really spinning my wheels. I'm not getting an ROI on the time I'm spending focusing on those stocks. And so that's typically why I've avoided them. But we had some good action on SHLL. But then I did a similar thing on SHLL, buying into a breakout, and there was a really big hidden seller there. It couldn't break that level, and then just like that, I was down 7,000 on it. So I don't think that right now yet is the time to say I need to, adjust my strategy or pivot. I think that this was a red day, which is fine. Last Monday was a red day, and yesterday was red, but then I got myself back to green. So I think that perhaps the thing just to be mindful about is how are the leading gappers performing, and is there any stock right now that is at high of day and is trading really well? Do we have any break of VWAP setups? And if we don't have any of that, if the stocks that we're looking at are choppy or the leading gappers have failed, then I think that requires a very honest acceptance of the fact that today is probably not going to be an awesome day. And, we all want every day to be an awesome day because that would be amazing. But that's not the reality. And so you have to trade the market you're in. And it is frustrating to be red on, some of these stocks. POLA, what's it at now? Well, came back down to 260. VXRT, it's at, 885. So it's kind of frustrating because I got chopped out in some of these red candles, and it has continued to go higher. So that would kind of, sometimes make a trader say, I'm not going to stop out. I'm frustrated stopping out only to watch it, continue on without me. But then, of course, the fact is VXRT continued on without you, but let's look at some of the others. Apex, and this was a stock that I bought for the breakthrough $1. So it came up right here, and as it broke through $1, I got long at $1.07 and added into $1.10, resumed from the halt and squeezed up to $1.19. So again, that was 15,000 shares, and I only made $1,000 on it. So not a big winner. But if you were still holding this, it's back down. If you were still holding CARV, obviously that one's just gone lower and lower. So while still holding, in some instances, you could look and be like, boy, I got chopped out and it ended up going higher. I would say more often than not, if you don't cut your losses, you're going to end up on some of these trades holding and hoping for a very long time, and that is not worth it. So, although this right now is a 1-minute micro pullback underneath the high, it's not something, unfortunately, that I can trust. And my performance on the day doesn't justify continuing to trade. So I have to throw in the towel, as disappointing as that is. This is a day where I failed to solve the puzzle of how to find profit as a day trader. And some days are going to be like that. It's impossible to be green every day out of the year. I mean, I would say probably, maybe there's someone that could do it, but it's almost impossible to be green every day out of the year. It just is an unrealistic expectation. You're going to have red days, and even on green days, you're going to have red trades. So today's a day where I wasn't able to get on the right side of these trades, and I would say the turning point was that really kind of dramatic fail on CARV out of the gates. So this is discouraging. It's discouraging to have a leading gapper in the entire market fail this dramatically. It does go to show that the catalyst was not well received. I mean, I don't know, you say it's not well received. It was well received, and then it wasn't well received. So I don't know. Maybe you had people on this who'd been holding from previous weeks back in here, and this was an opportunity for them to sell and get out for a smaller loss or break even. Maybe it wouldn't have really shaken out those types of traders until it got back up to 1750 or 18, perhaps. Short sellers saw the weakness from previous days and jumped on it. BYFC, another black-owned, operated financial company, has 2, 4, 6, 7, 8, 9 red days in a row. So perhaps it was just the wrong idea to think that this was going to continue, but based on the pre-market action, it was so strong pre-market that buying this first 5-minute pullback seemed like a no-brainer. And then buying this one right here also seemed like a no-brainer. And this was a surprise to me. So, trading the backside of the move is risky, and sometimes it works, but today it really didn't work. So something to be mindful of there, and to try to take a lesson from each day. Even if, some days it's like, well, I really would do everything again if the same thing happened tomorrow. So I think what I would do differently tomorrow is, if we see the leading gap or fail, I'll probably just say, you know what, I'm just going to ease off the throttle. Unless it does a break of VWAP. Unless something else is ripping and exploding, I'm just going to ease off, because this is hard to trust. And the fact is, VXRT and WKHS, WKHS is 69 million share float, VXRT is 46 million. They've got higher levels of institutional trading, higher levels of high frequency trading algorithms. They're going to be choppier. And so stocks like that, trading on the 1 minute, can be very difficult, which is why most people wouldn't trade mid caps and large caps, really focusing a lot on the 1 minute chart, and instead use more of the 5 minute for really more trending setups. So anyways, that's where I'm at today. And again, it doesn't mean that there might not be more opportunity today, but I can't trust myself to keep trading because I'm moving in the wrong direction. So I'm going to finish the last day of June on a red note, which is disappointing, but all things considered, it's been a great month, and it's just better not to have a snowball day where all of a sudden I'm down, 25,000, 35,000, 45,000, 50,000, and just look back and I'm like, what was I thinking? The market was terrible. Why was I being so aggressive? So this is where I'm drawing the line, down more than 10. I'll be back tomorrow. All right, so summer school is going to start here. So students, let's jump over into the Warrior Pro room, and we're going to start summer school in just a couple minutes.
And that right there was an entire video with no ads. I don't monetize my YouTube channel with video ads, which means you guys get to enjoy the content. But do me a favor, please hit that subscribe button and give me a thumbs up, and let YouTube know that this channel is the channel to watch if you want to learn about day trading.